Hey guys, what is up? Here's this week's Wyckoff Wednesdays episode. On this episode, I'm going to be talking about something that's kind of not a rare occurrence because it does happen, but something that you don't typically see or something that you don't typically like to make trades off of or take trades off of. I'm going to be talking about it on Euro USD. And the thing with Wyckoff Wednesdays, as you guys have probably now figured out, is that it really isn't about Wyckoff too much anymore. It's about order flow and understanding how the markets move. Yes, Wyckoff is important, but what's more important is the order flow of the markets, because at the end of the day, that's what Wyckoff is. Wyckoff is order flow, it's structure, it's everything really based off of how the markets are moving with volume. Wyckoff doesn't literally move the markets. Wyckoff is not the thing that moves the markets. Wyckoff is a schema or a scheme, whichever one is more appropriate, that characterizes changes in order flow that indicate price doing one thing, right? It's why they're called schematics, right? So Wyckoff is important, but what's more important is the order flow and the structure, because Wyckoff is also looking at structure with springs and UTADs, right? Those lead to breaks of structure. So that's what it's focused on. It's not that Wyckoff is like its own power. It's, its own thing that just moves the markets. Like when you get a schematic, it's not like the institutions are like, oh my gosh, that was a Wyckoff schematic. We need to, we're going to have a UTAD and a BOS. We're going to take price short now. That's a Wyckoff schematic. We need to push price down. It's not how it works. How it works is the banks are looking at volume. They're looking at liquidity in the form of these highs. Before they're broken, they're just liquidity. They're looking at liquidity here. And then they look at the BOS as a change in the sentiment, right? And then that's when they take it short. And Wyckoff is an easy way to represent these things. But that's not really what I'm talking about in this video. That was just a little note that I wanted to make a point of, because what is important is structure and order flow. So with this, okay, I'm going to go over USD, Euro USD, sorry. I just said USD. I'm just going to cover the dollar. Anyway, here we had a schematic, right? You could say that this was a schematic. I didn't even mark this up, but preliminary supply, buying climax, right? And then we had an ST, an up thrust, and a UTAD. So preliminary supply, buying climax, ST, up thrust, UTAD, BOS here, right? Break of structure, very clear. So what are we looking at here? So here we see that we had a clear BOS, right? And again, I didn't even mark this up as a schematic. I wasn't even paying attention to it. But what we ended up doing is we tested here, right? So this was a supply level. And you guys know by now, hopefully, that I trade a lot of supply and demand. So we tapped into the supply level, pushed down really nicely. It looked like it was going to go short, but ultimately didn't. Now, I expected it to go short, to be honest, because which ultimately did, because we need to come down into here. There's no way we're just going to leave this huge spike, right? We took liquidity and just moved, right? This is a structural point. So you guys can see, most important aspect of trading, by the way, structure, right? You could argue, there are so many ways you could argue this, but this is kind of how I see it. Boom, right? We broke above this high. This is a higher high, higher low, higher high, higher low, higher high. We need to come down to the origin of this push up, and the origin is all the way down here. It's not this, it's not up anywhere up in here. It's all the way down here. So we had a BOS, right? And this break of structure indicated to me that although we had this singular leg to the upside, right? We had this single leg, and this BOS indicated or told me that, okay, now we're probably going to get that retracement into here. This is where we're going to start pulling back. So what ended up happening? We started forming all of these supply levels, right? All of these supply levels. Here, 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 right? I pointed this one out earlier. Let me get rid of this stuff. So I pointed that one out earlier, okay? We start forming all these supply levels, and a couple of them you could have played off of, right? But we didn't have a BOS until here. So really, you could have only played off this, and it didn't even mitigate that. I actually remember this happening. I tried to short it, and it didn't work. So we just start forming supplies. Boom. This is a super clear doji supply candle. Again, another supply right here. Boom, supply, sell off, right? Sold off. So we expect price to reject off of this and head down, which it actually did end up doing. It got really close to, if you were to take this, it would have gotten very close to your stop, but this did end up playing out. And then we had the supply here, like that we did get a reaction off of, which I mentioned. So we did get a reaction, supply, right? You're going to react off all these levels. So you could have been eyeing this up here, okay? You could have been eyeing this. So this is one pullback, right? And I'll draw it all out. So we had I'll start from a little bit lower. So boom, here, pullback, boom, BOS right here. This is to me, this is the low of the market. Boom, right? Here's our pullback. Now, this leg, we don't form a new leg until we break this low, right? Did we break this low here? No, but we created equal lows, right? So I'm going to look at it like this. We created these equal lows, right? So now this is a new leg here. This is a leg. And you could also look at it like this. And for the illustrating what I'm about to show you, I'm going to look at it like this. Boom, boom, here, pull back, here, pull back, boom. So now this is ugly, and I'm sure you guys could see for a second, I struggled to pick where I actually wanted to put it, because it did this all last week. It was just disgusting, right? We don't like trading this, but this is your structure. Boom, lower low. Here's the most recent, meaning when this low came into the market, which high was the most recent one that did it? Is this high, not the one back here. And then we pulled back, made another low. So now for me, this is the new supply. We've made a new supply here, right? Because we're following this bear structure. So that means since we broke below this low, we broke below this low, okay? We broke below it. And now any supply up here like this is not valid, because in order to reach it, what would we do? We would break this structure here, okay? Break this structure here. Any supply within here, also invalid. This, totally invalid, right? But now here's the problem. Look at what price ended up doing today. It actually came up to mitigate this candle. Now here's the thing. I'm highlighting this trade because you definitely would have won. This would have been a beautiful trade, and you would have had a huge RR, and you also would have hit your TP really quickly, right? Which is great. But I can promise you guys that that does not work out that often. I put everything, every bit of knowledge from my trading career on it. That hardly ever works. And I'm highlighting this trade. I've talked about this in other videos, but guys, it's because it completely turned my trading around when I realized this. And I completely mean that. If you start doing what I'm talking about, where you're forming supply and demand, or, you know, we call them sell the buys, or whatever you want to call them. When you get these institutional candles is another word, like this, boom, boom, and you start going like this, and you're forming supplies, this could be like the higher time frames. When you break structure like this, you're now bullish. don't expect these to hold. Don't expect this to hold. Don't expect any of these supply levels to hold, because first of all, you're bullish, and part of it is not going against the structural, the structure of the market. Don't go against the structure. So when you turn bullish, you're obviously going to be making higher highs and higher lows. Don't try to go against that structure, guys. Don't try to go against this because you have a supply here. Because at the end of the day, when was this supply invalidated? This one here is invalidated once you broke this low. Once you didn't reach it and push lower, it's invalid, because in order to get back up to it, what are you going to have to do? You're going to have to come all the way up, break structure, and then it's just going to go straight through it. That's what always happens. And that's something that I've learned. And with this EU trade, I'm highlighting it again because did it work? Yeah, it worked out really well. Does this work a lot? No, it doesn't, because when you get a BOS like this here, there's no telling where it's going to stop. And that's exactly what I'm saying up here. But it used to work like that. The problem is smart money did used to work like that. You could place orders at buy to sell to buys, imbalance, whatever, and you were almost guaranteed to make money. You could risk 10% of your account and be certain you were going to make money. But it doesn't work like that anymore, and the banks know that. But everybody still trades as if it does. It doesn't. The order flow is going against you, right? You break this high, you're bullish. So now any supply, I don't care. If it's against the trend, do not take it. Don't try to call high, because what's going to end up happening is all of these are just liquidity, and that's when you get big expansionary legs. That's why expansionary legs are so much more impulsive, like expansionary in the direction of the trend. So much more impulsive is because all these little intermediate swings are just liquidity. So they're just going to take them out. And this part up here, the new high relative to this high here, that's liquidity. It's external liquidity. It's going to get taken out in no time. So the point is, with this EU trade, am I showing you guys the trade we took? No. Am I showing you a winning trade? Yeah. But at the end of the day, it's not a trade I would have taken. I wouldn't. As soon as it trades above this, I'm like, nope, I'm not trying to call high. I'm not going to try to sell it, because now we're bullish and all of these are invalidated. And even though this one held, guess what happened? This one didn't hold. You broke above it, and that's what I'm saying. You break counter trend structure. Don't try to call highs. Don't try to play invalid zones. And invalid zones occur again if you're forming a downtrend. You have supply here. You pull back and miss it, it go down, it's invalid automatically. So that's the point, guys. That's what I want to drive home. You may see an EU trade like this and think it's good because supply and demand is great, which it honestly is, but don't take it against structure, and don't just place it at random levels. I guarantee you someone today took this because that was a too clean of a 15-minute doji, and they were like, oh, I'm placing an order there, and they probably had a great trade. But in the long run, do not take trades like this. And I know this worked because a lot of smart money traders were looking at it, and it's just like retail. You got to keep the retail money in the game. So retail has to play out sometimes, just like this. Sometimes trades like this have to play out, but statistically in the long run, it's not beneficial to take trades that are against structure or what have you. It's just not smart. And I wanted to, again, highlight that fact, but also show you exactly what I'm saying with this illustration up here. With this illustration up here. So I hope you guys enjoyed this video. I know it's probably not the most exciting, but that I don't mind, because it is something that's helped my trading. And for anyone who decides to listen, I promise it will help you a lot. So remember what I said here. I've mentioned it in other videos. Go back and watch them if you want to. But anyway, I hope you guys enjoyed. If you liked the video, leave a like, and we'll speak to you all next time. Bye, guys.